to this come. The Lebanese banks, in their own greedy profiteering, turned the country's financial system dollar insolvent. But when it came to bearing the consequence of their own set of actions, instead of taking accountability and accepting restructuring, instead of accepting all of these things, haphazardly implemented random swaths of capital controls ambiguously across that suited their own needs. These capital controls, in most instances, were random, dependent, varied from bank to bank, and didn't provide a cohesive set of things. We'd even much rather have anything else that happened. First, let's clarify what this debate is not about. This debate is not about a legislative, cohesive, central capital controls, but rather independent capital controls that bank randomly decided to show up one day at different points of time that made no sense to investors coming across. So OP has to defend the status quo the way it happened, which is going to be really hard because the way it happened was not great. OP also has to defend what happened in status quo, that is, in most instances, where rich people were still able to engage in capital flight, they were still able to use their well-connected means to get their money out of the system, while individual poor people suffered on the ground. We can get away and bite the bullet and get along this. First, let's talk about banks and why banks are culpable in these instances, and how did we get to the liquidity crisis in the way it happened right now. First, the reason for it is banks, just in their like incentive to make more money, had high investments into sovereign debts in like Lebanon, for example, right? They just kept purchasing treasury bonds, euro bonds, etc., and dollar denominated debt to finance basically unsustainable deficit, unsustainable things. And this was literally a Ponzi scheme, because in most instances they were just borrowing more money to pay back whatever was remaining in the very first place. So that's like, this is literally like something that is unsustainable. They knew that, but they kept doing it because they could just turn a blind eye to it and make sure things go well. They were also enjoying like higher interest rate to like attract fresh deposit. These helped like these banks keep making more money, and they'll hire even higher interest rates to these dollar deposits to basically attract even more money coming in, like foreign currency coming in, which also had huge amount of harms in terms of, for example, Lebanese money and Lebanese currency, and it destabilized Lebanese currency to a large degree. And later on, as things happen, and when like basically they feared risk of insolvency, they implemented capital controls that further this insolvency, something we'll prove in a little bit, means that now these deposits were literally worthless. You got the default crisis. We claim it would have been less likely on our side if in 2019 we didn't get like capital controls in the very first place. But also, like in most instances, it looked like these banks often failing to address their insolvency, failing to make structural cuts on their side of the house. Second, on the counterfactual, on upside, maybe you're able to defend your insolvency a little bit, right? Maybe you're able to delay the insolvency, and maybe you don't have to immediately pay out that money. Maybe you get some degrees of bank runs on a shorter side. But I want to point out that the insolvency is further on their side of the house, right? There are several reasons for why insolvency got worse between the period of 2019 to 2020 when you had these capital controls. First, because on the public level, there was a quite huge of outlooks when different banks in a non-cohesive way started implementing capital controls to a reasonable degree. First, it eroded huge amount of trust that existed in the banking system. When you save a huge amount of money, both as an investor and a person on the ground, and bank tells you that I will randomly decide to what extent I'm able to decide how the money is coming in and out of the system, means that just people suddenly had no trust in the level of banks, etc. So they move to other things. They move to things like shadow bank. They move to like different sets of systems in status quo because they couldn't work, for example, with these given banks because of the way they were doing, because they had no trust. But it's also meant more investors had even further crisis in terms of investing into Lebanon, which meant like there was no more money coming in that could have solved these set of systems. Secondly, they crippled like huge amount of economic activity. Like you don't get tax revenues, you don't get like you just get further worsening of fiscal deficit. So you don't get like any capacity to make debt obligations. Third, like currency crisis, as I previously pointed out, that happened in this instance. But also you just further worsen the amount of restructuring and debt that is happening. But finally, I want to just point out, as I point out in status quo in the beginning of my speech was happened, you just get worsening of liquidity crisis because the richest people can still get their money out through other platforms, while poorer people who had their money saved in dollars, because Lebanon worked on a dual currency system in status quo, were the people who were basically bearing the brunt of it, were the people who were like letting the bank survive. And these were the people who were getting the crisis on their withdrawal, not being able to use their money to fund their kids' education into other countries, etc., and so forth. So on their side of the house, they have to defend why this period to 2019-20 actually reduced insolvency when we see in status quo that furthered and actually led to the default that happened in the first place. What happens in the opposition world, right? A government world. First, you just get earlier bank failures. And we're happy to basically bite the bullet that you'll get some degree of short-term pains and some degree of severe short-term harms, right? You get maybe some degree of collapse of the banking system, some degree of government financing is more chaotic, but there's more, and maybe there's more immediate pain for depositors, but that's okay because that leads to a period of huge amount of release. Look at 2008 currency crisis that happened in the United States. In most instances, in the period when you're able to do perfect degree of debt restructuring that will happen in a little bit on our side of the house, means that you'll get just long-term sustainability for Lebanon. While on this side, you just keep worsening the insolvency further and further without providing a solution until you get to a state where you literally have no other choice. Second, I think on our side of the house, you likely get quicker IMF assistance. Note that in 2020, Lebanon was offered high degree of, for example, IMF assistance, IMF bailouts that didn't go through because one of the main conditions this was contingent upon was huge amount of banking structure restructuring. All of the problems I pointed out are the problems they had to work through. But it was quite hard when you had just different degrees of capital controls existing between different banks in many instances, where you didn't have a common degree of cohesive policy, right? On our side, what likely happens is things like legal accountability. So in many instances, banks have to give away money on some of their depositors. They have to do things like debt write-downs or haircuts. They have to recapitalize banks, and maybe you have to revalue assets and liabilities. But on the other end, on the other side of the spectrum, improves the banking sector for the very long time, improves the amount of money that individual people have in the long time and the system that they have. Which means on our side of the house, you likely get at least some degree of addressal of that corruption. You likely get some degree of regulation and oversight. You likely get some degree of currency and capital reform that's going to be very meaningful for people for a very long time to come. But finally, on the very end, the people on individual ground are going to feel the pain on both sides of the house. These are individual people who had money saved, that their money is going worthless, and they're not able to do anything about it because the economy is frozen, because they don't have the capacity to do anything with their money. They're stuck. They don't have any capacity to do anything. On our side of the house, maybe this still happens, but in the short time, they can start to get to relief rather than be stuck into this crisis for 4 years, still trying to get IMF bailout that's coming now that could have came in 2020, but couldn't happen because these banks refused to negotiate both with the government and with the IMF, and led to all of the harms that manifested in our side of the house. Very proud to.
Hi, sorry, give me 1 sec to get my timer. A number of fairly critical points of clarification about Omesh's speech. First, in 2019 and in 2020, the IMF was intricately involved in Lebanon's default and restructuring of its debt. We know this because the IMF is involved every time a sovereign country with ties to the global community defaults. Lebanon has banks. Some of those banks trade with Europe and the US. Of course, the IMF was involved. Second, I want to dismiss this bizarre framing that the Lebanese banks were evil, ran massive Ponzi schemes, and then unilaterally implemented capital controls to prevent a payback. Facially, this is unlikely. These banks would compete with each other, but every bank, to a varying extent, implemented capital controls. To buy Omesh's framing, you would have to believe that there isn't a single honest banker in Lebanon who would want to do the right thing or call out these banks for this. B, no journalist called out these banks who are cartelling in the alleged illegal activity. And C, the government just allowed this corruption to happen. This is less likely than our simple explanation, which is that the Lebanese economy was failing across the board and capital controls were needed to stop the catastrophic collapse of the financial sector. Why was the Lebanese economy failing across the board? Three reasons. Firstly, Lebanon has no economy. It has no commodity goods and no services sector to speak of. The country is deeply impoverished. Secondly, widespread political gridlock. The country's political identity is deeply tied up with religion, as there are roughly similar numbers of Sunni, Shiite, and Christians in the country. The government even has a constitutionally mandated reserved seat system that creates a three-way power split between the three political coalitions that represent said religions. The prime minister, president, and speaker of the House must always be of the three different religions. This makes it functionally impossible to pass policy, as there is a persistent political incentive to avoid the other two groups ganging up on you, meaning that your policy proposals have to be inevitably very weak and very compromisatory. Third is the threat of war. Even back in 2019, Hezbollah was using southern Lebanon as a primary base of operations, leading to outsized Iranian and Islamist influence. These actions, tacitly and openly to varying extents, were supported by the Shiite Party of Lebanon. Israel bombing Hamas strongholds, even back in 2019, but also today, happened like once a week. So there were persistent border security concerns and fear that the conflict might escalate, which, to be clear, it did. Like, Israel has been bombing Lebanon a lot more since October 7th. So why were capital controls, rather than this scheme of the banks, something that was truly necessary for Lebanon's survival? Two reasons. One, when Lebanon began talking with the IMF to restructure its debt, the IMF insisted on them. Lebanon, as part of the global community, has been bailed out by the IMF numerous times. Whoa, guys! Doesn't the info slide say that the capital controls were passed in 2019, but the bailout only happened in 2020? Yeah, but that's how this stuff normally works. IMF bailouts are a multi-year process, and typically the IMFs insist on its conditional policies being put in place before the IMF forks over money to the banks. If they did it in the other order, the banks would actually pocket a lot of the IMF's money. Also, the IMF helps some banks more than others. Just like intuitively, if you have a very large bank, the IMF is going to give that bank more money than a very small bank. But they also did discriminate on the banks based on how strong their capital controls policies are, how strong their adherence to IMF restrictions are. And so the IMF chooses which banks to support based on how much they like the capital control scheme each bank chose. Why is it likely, overwhelmingly likely, that the IMF insisted on capital controls and that capital controls were a deal breaker for IMF involvement? One, cultures of austerity like those embraced by the IMF are inherently paternalistic. We know how you should spend your money. The common people don't, so we're going to tell you what to do and what to spend. The IMF also needs to crack down on wasteful spending to maintain the political salience of funding streams from Western nations. A single extravagant scandal in Lebanon could jeopardize IMF programs around the world. And more tactically, capital controls make it easier for the IMF to audit banks, as large volumes of the money can't be withdrawn as cash and shipped off to other places around the world. The impact is very simple. The IMF, in the absence of capital controls, would have likely changed the extent to which it helped Lebanon in 2019 and 2020. This means less dollar injections, less capital underwriting for banks, less lines of credit, less facilitation with the global financial markets. Potentially, the IMF might abandon Lebanon entirely, allowing it to fail. It would feel bad about it, of course. The IMF aren't like monsters, but they know that they have other states that also need help, and they simply might prioritize those over the outcomes of the Lebanese people. This is, again, incredibly salient. In 2019 and in 2020, especially as COVID hit, the Lebanese economy was doing truly abysmal. Marginally less support to the IMF might have led the entire system to collapse. Which segs into my second argument. Capital controls were incredibly necessary to prevent a widespread run on Lebanese banks, leading to the full failure of the Lebanese financial sector. One, there's just very little trust in these banks in Lebanon. As Omesh says, there is a culture of corruption, although it's not remotely as widespread as he makes it out to be. The broader concern, I think, was fears of mismanagement, that these banks just kind of didn't know what they were doing and they might run out of money. There's a first mover problem intrinsic to a run on a consumer bank. The people who withdraw their money first get their money out, but the people who don't, right, or who wait, risk the bank going under, not having any money to give back to them, and thus being left with nothing. Notably, Lebanon does not have an FDIC or other trusted public deposit insurance scheme, so there's no guarantee that those people were going to get their money back from somebody. And the lack of trust is a self-fulfilling prophecy. Banks make money by loaning out other people's deposits. But if enough people withdraw at the same time or in a short period of time, the bank won't have enough liquidity or cash to pay out, and the bank will go under. The Lebanese government, of course, for all of the reasons described above, is broke as a joke and can't recapitalize the banks by itself. So they turn to the IMF for help, but they're the ones who insisted on capital controls in the first place. Bank failure, the potential risk of bank failure, would destroy the Lebanese economy full stop. You'd have no ability to deposit money, take out a loan, start a small business, or raise working capital for a big enterprise. The loss of banks also strips people of access to digital currencies and, as a result, many digital technologies. You can't pay for WhatsApp Premium if you don't have a bank account because Meta literally does not accept cash payment. So you destroy people's abilities to use many of the mobile apps they rely on for communications, maps, basic research, transportation, basic facilitation, payment for goods and services, etc., etc. How do these two arguments interact with Gov's case? I think very simply, there's a scope and scale problem. I can concede some of Gov's arguments, right? Like rich people are getting money out on either side of the house. Yes, there are just like widespread loopholes in any banking system that allow the rich and the powerful to suborn capital controls, but that's kind of true regardless of what the counterfactual is. I think the bigger concern is whether or not we keep these banks afloat, whether or not Lebanon has a functioning financial sector, whether or not it has a functioning digital financial sector, and whether or not payments rails stay in place, banks stay open, capital flows keep flowing. I think the bigger problem is this weird Gov idea that like somehow we could let some banks fail, but that wouldn't cause all of the banks to fail. This is deeply untrue, right? One, Lebanon's economy and political situation means that it is deeply vulnerable to full-scale failure. Two, Lebanon's just not that big a country. Like at a certain point, if enough of its major banks fail, that is the entire country's financial sector. And three, Lebanese banks, like all banks, are deeply interrelated. The reason the global financial crisis started in the United States was the vast majority of banks underwrite each other's debt and underwrite instruments on each other's balance sheets. When one bank fails and the assets of that bank go under, they are then either sold or liquidated at a fire sale premium, leading to what's called contagion or the spread of toxic assets, where the debt of one bank drags down all of the proximately healthy banks. That like can be stopped if there are enough healthy banks or enough capital injections to stop the spread of that contagion. But that's incredibly unlikely in a place like Lebanon. One, because there aren't that many banks to begin with. Two, because there aren't that many healthy banks to begin with. Three, because there's very little ability to get capital infusion fast. If for no other reason, then like sovereign governments move way faster than the IMF, but Lebanon's sovereign government has no money, so they'd have to wait around for the IMF deal to go through. And look, within the grand scheme of things, even if you don't buy any of these warrants, remember a year after the capital controls COVID hit, which would have been like a brutal double down on bank failures with respect to the question of the underlying economics that gird these financial markets. What does this mean? I don't think Gov and Op are too far off on what capital controls did. We are just very off on what the counterfactual world looks like. Op has proven, I think beyond a reasonable doubt, that in a world without capital controls, Lebanon would have no capital to control. We are very proud to oppose.